China punishes cryptocurrency investors, oil prices rise, and the ASX is set to fall and then rise. Crypto exchanges like Binance are no longer accepting new accounts from mainland China and will gradually close the Chinese accounts, as no one wants to take the risk of having Beijing on its shoulders, says Ipek Ozkardeskaya, senior analyst at Swissquote. While energy stocks helped drive the stock market higher on Monday, the ASX is expected to fall in morning trading due to mixed results on Wall Street. Investors will be keeping a close eye on oil prices, which have reached a 3-year high as the sector benefits from critical European shortages. More on that later, but here's what we know so far. Global oil prices rose by nearly 2% on Monday. The Brent crude price increased by $1.44, or 1.8%, to a 3-year high of $79.53 per barrel. Base metal prices were mostly lower on Monday. Tin fell 4.4%. Nickel fell 2.3%. The price of lead increased by 0.6%. Copper increased by 0.3%. The price of gold futures rose by US 30 cents per ounce, or less than 0.1%, to $1,752 per ounce. At the close in the United States, spot gold was trading near $1,750 per ounce. Iron ore increased by $8.50 per ton, or 7.7%, to $118.65 per ton. The Australian dollar has risen slightly, trading at $0.7288. Australian markets. The S&P/ASX 200 index rose 0.57% to 7,384.2 points on Monday, led by gains in energy, materials, financials, and consumer discretionary stocks. A more detailed plan to reopen NSW, the country's largest state economy, may also have piqued the interest of investors. The Commonwealth Bank's share price rose 2.9% as a result of the news. Meanwhile, oil and gas producers stood out, with Woodside up 3.2% to $22.88 and Oil Search up 1.99% to $4.11 as investors sought winners from Europe's fuel shortages as the continent entered winter. The ASX is expected to fall in trading this morning, but analysts expect a quick recovery, leading to a higher close. We're going to keep the Aussie wrap brief and flip things around a little because what's going on in Europe could have far-reaching consequences. Australian indices. The ASX 200 rose 0.57% to 7,384.20. ASX 24 futures fell 0.6% to 7,310. The S&P/ASX Small Ordinaries Index rose 0.64% to 3,515.70. All Ordinaries rose 0.54% to 7,690.70. European markets. The price of natural gas rose 13.4% overnight to $5.83. Rising prices are being driven in part by severe shortages across Europe as a result of disruptions in supplies from Norway and Russia. According to Alex Moffat, director of Joseph Palmer & Sons, the situation is deteriorating, and with the colder weather approaching, many people will struggle to heat their homes. One cynical observer has even accused Russia of deliberately withholding supplies. Part of the problem stems from the history of resellers offering fixed-price gas to customers and then betting on the future price, hoping to profit from the difference. With shortages from major suppliers pushing up wholesale gas prices, a contango has occurred in which the futures price is higher than the spot price. Many of these energy resellers in the UK and Europe are failing, and as a result, households suffer. Ipek Ozkardeskaya, senior analyst at Swissquote, believes that the natural gas futures rebound will continue as winter approaches. The rally is gaining momentum, and we may well see the bulls attempt on $80 per barrel in the coming weeks, Ozkardeskaya said. However, fast rising oil prices also mean more pressure on inflation, and more pressure on inflation means tighter central bank policies and less support for economic activity, which in turn means slower demand, Ozkardeskaya said. As a result, the rally should have only limited upside. The other major event in Europe is the German election, in which the SPD party appears to be ahead of outgoing Angela Merkel's Christian Democrats. The Greens came in third place. Now, an SPD-led coalition in Germany is quite bearish for the DAX, as the centre-left party is in favour of raising minimum wages, raising taxes, and supporting labour at the expense of capital, the kind of changes that would weigh on company earnings and share prices, Ozkardeskaya said. However, what can be done will obviously depend on coalition partners, and changes will not happen overnight. There is no particular stress on DAX futures this morning, which will most likely continue to recover from last week's losses. However, it is important to remember that the ECB's hawkish shift in policy as a result of higher inflation and the new German government could slow the DAX rally compared to what it would have been otherwise. We still have a few weeks and months of uncertainty that could dampen appetite in German stocks, but the DAX will most likely not fall alone. The overall trend will depend on overall market sentiment. European indices. The Stoxx 600 fell 0.19% to 462.42. The German DAX rose 0.3% to 15,573.88. The UK FTSE rose 0.2% to 7,063.40. US markets. Treasury bond yields have risen. The US 10-year note is currently yielding 1.49%, and the move was noticed by traders in technology stocks, who pushed prices lower. Despite disappointing news on the wire, US and European futures traded mostly in the positive, implying further consolidation in US equities at the start of the week, particularly in energy stocks. Evergrande continues to loom large and binds China to the US in ways the US would prefer not to. The Evergrande debt crisis, the Chinese energy crackdown on missed targets, and the ban on cryptocurrencies have been shaking the markets, along with the Federal Reserve's Fed more hawkish policy stance last week, not only on the taper front but also on interest rates, Ozkardeskaya said. Indices in the United States. The Dow Jones rose 0.2% to 34,869.37. The S&P 500 dropped 0.3% to 4,443.11. The Nasdaq fell 0.5% to 14,969.97. What's going on in Asia? This week, Ozkardeskaya believes that the one place to avoid is Chinese equities. First, while an eventual Evergrande bankruptcy would not cause a systemic crisis, it would mean that Chinese companies would have a more difficult time obtaining new credit. And, because credit growth has been one of the major pillars of Chinese growth over the last decade, and because Chinese growth fuels global growth, it is a major concern for global growth as well, he said. Then, another major pillar of Chinese growth, energy, is in crisis, with headlines indicating that half of China's regions missed their energy consumption targets, resulting in factories being ordered to cut production or even shut down to meet Beijing's green goals. That is good news for the environment, but obviously bad news for Chinese economic activity. In China, cryptocurrency is also in the gun. Cryptocurrencies have been targeted by Chinese crackdown rules, with all crypto transactions and mining activities now prohibited in China. All crypto-related activities were already prohibited in China, but they were still taking place because Chinese mainlanders always found ways to circumvent the regulations, Ozkardeskaya explained. However, it appears that a loophole that allowed citizens to trade cryptocurrencies has been closed, and the impact is real. Crypto exchanges like Binance are no longer accepting new accounts from mainland China and will gradually close the Chinese accounts, as no one wants to take the risk of having Beijing on its shoulders. The impact of the latest Chinese news on Bitcoin's price was significant but not dramatic, as the $40,000 support held well during the knee-jerk drop and over the weekend. However, Bitcoin is still in a bearish consolidation zone and should move above the $44/45K mark to re-enter the positive trend. Otherwise, we may see the price of a coin fluctuate between 40 and 45K without much excitement for traders. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.